Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the real estate industry. I'm your host, Steve Hamoan, and today we're diving into a topic that many Canadians are currently grappling with. Should I go with a fixed or variable mortgage? This question has become particularly pressing as the Bank of Canada has recently lowered its overnight lending rate to 3.75%. Let's break down what this means for you as a homebuyer or homeowner in Ontario. With the Bank of Canada's decision to decrease the overnight lending rate, many are wondering how this affects their mortgage choices. The overnight lending rate is crucial as it influences the prime lending rate offered by banks and mortgage lenders, which is now sitting at 5.95%. This rate directly impacts what you will pay on your mortgage and loans. Let's start by understanding the difference between fixed and variable rate mortgages. A fixed rate mortgage locks in your interest rate for the term of the loan, providing consistency in your payments, whether they're weekly or monthly. On the other hand, a variable rate mortgage fluctuates with the lender's prime interest rate, which means your payments can go up or down over time. One advantage of a variable rate mortgage is that historically, they have led to cost savings over the full mortgage term of 20 to 25 years, allowing homeowners to pay down their principal more quickly. However, during the pandemic, those with variable rates experienced significant payment increases as the Bank of Canada raised its rates to 5%. Nick Lecuyer, a broker and founder of Mortgage Wellness, points out that traditionally, variable rates offered about a 1% advantage over fixed rates, making them an attractive choice. But in recent years, variable rates have been approximately 1% higher than fixed rates, which is a reversal of their usual relationship. Despite this shift, there's been a rise in inquiries about variable rate mortgages. Many Canadians are reconsidering them as the Bank of Canada continues to cut rates, hoping to capitalize on future savings. However, when they learn that fixed rates are currently over 1% lower, most opt for the immediate savings a fixed rate offers. Fixed rates provide peace of mind, especially for those who prefer stability in their financial planning. Many borrowers have been choosing shorter fixed terms, anticipating that interest rates will drop further by the time their mortgage is up for renewal. The Bank of Canada's rate cuts have sparked interest in variable rates due to their flexibility. Borrowers can switch to a fixed rate at no cost if rates start to rise again, appealing to those willing to take on some risk for potential savings down the line. Industry experts, including Nick Lecuyer, predict that fixed rates could stabilize in the mid to high 3% range by 2025, with variable rates expected to fall to similar levels. This could make waiting for a mortgage renewal a smart move, as rates are likely to continue declining. For anyone nearing a mortgage renewal, it might be beneficial to hold off for as long as possible to take advantage of these expected rate declines. Coupled with government efforts to improve housing affordability, we might see a robust spring housing market. As always, it's crucial to consult with a mortgage professional to explore the best options for your situation. They can provide tailored advice based on the current market conditions and your personal financial goals. Let's talk about the Toronto condo market, which has been experiencing some significant turbulence lately. Recent data from the Toronto Regional Real Estate Board reveals that the benchmark condo apartment price in Greater Toronto took one of its sharpest monthly dives on record in September. This isn't the kind of news condo owners were hoping for, especially those banking on the recent monetary easing cycle to bolster prices. In September, the benchmark condo price in Greater Toronto dropped by 2%, which translates to a decrease of $13,400, bringing the price down to $654,300. This marks the fifth consecutive month of declining prices, with each month seeing larger declines than the last. In fact, this drop was the fifth largest on record, surpassed only by some months in 2022 and January 2009. Despite the recent easing of mortgage rates, condo prices are still notably lower than they were a year ago, with September's prices down by 7.2%, or $50,400, compared to the same time last year. This rapid decline is reminiscent of the early 90s, a time before the modern city and real estate board were established. Over the past 2 years, Greater Toronto condo prices have been in a downward trend, falling 16.6% since reaching their peak in April 2022. Currently, prices have regressed to levels not seen since October 2021, effectively erasing any gains made over the last 3 years. However, it's worth noting that despite this backslide, condos are still priced 22.8% higher than they were in January 2020, reflecting substantial growth over the longer term. The expectation was that the monetary easing cycle would stimulate demand and, in turn, bolster prices. However, the reality has been quite different. As easing took effect, it seemed to have little impact on the market. Instead, there's been an increase in sellers, coupled with rising rental vacancies and mortgage delinquencies. Interestingly, while some speculators may be feeling the pinch, the average end user hasn't been as adversely affected. Many of those who invested in condos for income are facing challenges with negative cash flow, but the declines aren't expected to lead to catastrophic losses. This is somewhat reassuring, given that investors have largely displaced end users in recent years. Today, we're delving into a significant development in the Ontario real estate sector, as the Ontario Real Estate Association, or OREA, has unveiled a set of bold policy recommendations aimed at elevating professional standards across the province. These recommendations are part of a larger effort to enhance consumer confidence, improve education and professionalism among real estate agents, and deter unethical behavior through stronger penalties. OREA's latest white paper, titled Continuing to Raise the Bar for Real Estate in Ontario, outlines 9 policy recommendations. These proposals are designed to position Ontario as a leader in North America regarding professional standards in real estate. This initiative follows the passage of the Trust in Real Estate Services Act, or TRESA, in 2020, which was a significant legislative effort supported by OREA to modernize the real estate industry. The new recommendations are intended for the third phase of TRESA's implementation. Let's break down the key areas these recommendations focus on. First, improving consumer confidence with increased protections. OREA suggests eliminating the 2-tiered consumer protection system by requiring auctioneers who transact real estate to register with the Real Estate Council of Ontario, or RESO. This would ensure that all parties involved in real estate transactions are held to the same standards. Additionally, they propose amending TRESA to introduce new rules on latent defects and disclosure obligations, ensuring that consumers have all the necessary information when purchasing a home. In terms of written disclosures, OREA recommends that there should be clear terms and conditions for guaranteed sales, making sure these are transparently communicated to consumers. They also advocate for ombudsperson oversight to boost confidence in RECO's programs, aligning it with over 1,000 other government agencies that have such oversight. The next major focus is on raising the bar for education and professionalism. OREA is pushing for a more practical and comprehensive education system, which includes a new 2-year articling and mentorship requirement for new registrants. This would help ensure that new realtors, ER, are well prepared to meet the evolving demands of the market. Furthermore, they recommend enacting Section 8 of TRESA to allow registrants to use specialty certification designations, which could cover areas like commercial, farm and agriculture, waterfront and recreational, or condominiums. Finally, to deter bad behavior, OREA is calling for stronger penalties. They suggest that TRESA should permit administrative monetary penalties for clear-cut violations, such as advertising breaches. Moreover, they propose that RECO should have the authority to order disgorgement, requiring registrants to repay profits gained through breaches of TRESA and its code of ethics. This would ensure that any ill-gotten gains are returned to victims and impacted parties, eliminating financial incentives for unethical behavior. OREA also recommends extending the mandatory cooling-off period to nearly 2 years for individuals who commit major violations, preventing them from reapplying for registration during this time. This would serve as a significant deterrent against unethical practices. Rick Kedzior, the president of OREA, underscores the importance of these recommendations, emphasizing that buying or selling a home is one of the biggest financial decisions most Ontarians will make. He stresses that Ontarians deserve realtors they can trust and depend on throughout this process. By implementing these 9 bold policy proposals, the Government of Ontario has a chance to lead in professional standards and consumer protections, thereby strengthening the real estate sector for generations to come. Today, we're diving into the latest insights from Scotiabank's 2024 housing poll, which sheds light on the homeownership landscape among young Canadians. The report reveals a significant decline in homeownership among those aged 18 to 34, with only 26% currently owning a home, down from 47% in 2021. This shift indicates a growing trend of younger Canadians opting to live with family or parents, with 29% of this age group now in such living arrangements, compared to around 1/5 3 years ago. Despite the hurdles presented by the current housing market, the survey highlights a sense of optimism among younger generations. 58% of non-homeowners aged 18 to 43 are determined to purchase a home within the next 5 years. This determination is noteworthy, given the economic challenges many face. However, the poll also uncovers a confidence gap among young Canadians regarding the home buying process. 63% of Gen Z and 54% of millennials express the need for clearer information and more robust support from financial institutions. This gap suggests that while the desire to own a home is strong, there is a significant demand for better guidance and education to navigate the complexities of home buying. The economic environment is another critical factor influencing young Canadians' home buying plans. More than half of those surveyed in this age group report that their finances are adversely affected by the current economic climate, forcing them to delay their homeownership aspirations. This scenario underscores the importance of understanding the broader economic trends and how they impact personal financial decisions. In summary, while fewer young Canadians own homes today compared to a few years ago, the aspiration to own remains strong. The next 5 years will be pivotal as this demographic seeks to overcome economic and informational barriers to achieve their home ownership goals. For financial institutions and real estate professionals, this presents an opportunity to engage with younger buyers by providing the necessary resources and support to bridge the confidence gap and facilitate informed decision-making. Today, we're turning our attention to a troubling case of fraud that has impacted over 200 Ontarians. The Ontario Provincial Police, or OPP, have arrested 2 individuals in connection with a door-to-door sales scheme that preyed on older adults and vulnerable individuals across the province. This scheme, which involved fraudulent home service and renovation agreements, left many victims in financial peril. The fraudsters, posing as legitimate salespeople, convinced victims that they were receiving free services, installations, and renovations through supposed government grants or rebates. However, these agreements were anything but free. The organizers of this scheme allegedly used these fake agreements to register Notice of Security Interests, or NOSIs, against the victims' homes without their knowledge. These NOSIs were then paid off using fraudulent, high-interest mortgages, lining the pockets of the fraudsters. The financial impact on the victims was severe, with some forced to sell their homes as a result. This case underscores the vulnerability of certain populations to such schemes and the devastating consequences they can have. Earlier this year, the Ontario government took steps to protect homeowners by banning the registration of NOSIs on a land title, a move that aims to curb such fraudulent activities. The arrests of Austin Atchison, age 29, from Woodbridge, and Danielle Harrison, age 39, from Mississauga, mark a significant development in this ongoing investigation, known as Project Nettle. Both individuals have been charged with fraud over $5,000, with Harrison facing an additional charge of possession of property obtained by crime over $5,000. They have been released from custody and are set to appear in court next month. This investigation has also led to the arrest of 2 other individuals, Rajivan Thilendaraja and Sajjad Ahmad, and the issuance of Canada-wide warrants for 3 additional suspects. These suspects are wanted on multiple charges, including fraud over $5,000 and possession of property obtained by crime over $5,000. The OPP's Serious Fraud Office continues to seek information from the public to aid in this investigation. For anyone who suspects they might be a victim of this or any other fraud, the authorities urge them to contact their local police or Crime Stoppers. Additionally, the Canadian Anti-Fraud Centre is available to provide support and take reports from victims. As we wrap up today's episode, it's a stark reminder of the importance of vigilance and awareness when it comes to protecting oneself from fraud. The real estate market can be complex, and unfortunately, there are those who seek to exploit it for their gain. Always verify the legitimacy of home service offers and consult with trusted professionals to ensure your financial safety. Thank you for tuning in to the Ontario Mortgage and Real Estate Insights podcast. I hope today's discussions have provided valuable insights and awareness. Until next time, stay informed and stay safe.